Hi guys, welcome back. This is the Smart Invest. As you all have seen in recent days, the Google stock price has experienced a significant drop after its quarterly report. Is the giant company facing problems, or is this a great buying opportunity? If you'd like to know precisely what this quarterly report contains, why the Google stock price fall, and what I personally plan to do with my Google stocks, or maybe the 2030 price predictions I've made, then stick around for a few minutes. I'd like to clarify that this video does not constitute financial advice. It's merely the personal opinion of an amateur investor. So let's take a look at what might be in this unsettling quarterly report that caused Google's stock to drop 14% in the next 3 days. As we can see, Google's revenues have increased by 11%, which isn't too bad. When we look at operating income, we see an even larger positive figure, and the operating margin has also risen to 28%. The net income was $19.7 billion, which is nearly a 50% increase. Upon closer examination, we can see that Google has achieved growth in every sector except for the Google Networks segment, where their revenue has only slightly decreased. If we look at Google's balance sheet, we can see that they are standing more stably than most of us with no financial issues. Shareholders' equity has increased, and they could pay off their long-term debt at any time. Compared to the previous year, Google has performed exceptionally well, partly due to high inflation. However, it's clear that Google, as a technology company, is well equipped to combat inflation and economic challenges. The free cash flow reached a record high of $22.6 billion. So what will they do with all this money? They are buying back a substantial amount of their own shares, resulting in the repurchase of over 3% of shares in the past year. We can also see that Google is investing more significant amounts in research and development, which further aids them in maintaining and increasing their competitive advantage. Return on invested capital has risen to over 20% since 2021, which is an excellent figure. This shows that Google can reinvest its earnings at a high return, and they seem to be doing this more effectively over time. All in all, to me, this report doesn't seem so bad as to justify such a substantial drop in the stock price. But why is Google falling then? The growth of Google Cloud fell short of expectations. The so-called useless Google Cloud was only able to increase its revenue by 22%, as opposed to the expected 28%, and its operative income was a mere $266 million, instead of the previous year's $500 million loss. In contrast, Microsoft's cloud-based service grew by 24%, which is why the market is now berating Google for this lapse. Not to mention, Microsoft is also the largest investor in OpenAI, which is currently leading in AI developments. This is worth mentioning as well. But how much of Google's revenues does this Google Cloud contribute if it was able to cause such a significant problem for us? Google Cloud accounts for roughly a brutal 2% of the total revenue. The fact that YouTube and the Google advertising sector, which make up a significantly larger portion of revenue, exceeded expectations, couldn't save the stock from the plunge. Don't look for rationality in short-term movements. Instead, after analyzing the situation, start thinking about how to profit from them. Now let's take a look at my 2030 stock price forecast. I've prepared not just one, but 3 possible scenarios for you: an optimistic, a pessimistic, and a realistic forecast. In the pessimistic scenario, we see that Google will be able to increase its revenues in the coming years by around 10% or slightly less. With the intensifying competition due to developing AI, Google's profit margins gradually decline. Due to intense competition, the market sentiment won't be as bright, and in 2030, Google may trade at a PE ratio of 15. In this case, the stock price in 2030 could be around $130. In the realistic scenario, Google proves itself capable of increasing its revenues by 10–15% annually and managing to improve its profit margins due to the evolving AI. Thanks to high margins and gradual share buybacks, the company will be trading at a PE ratio of 27 in 2030. As a result, we might see a stock price of $525 in 2030. Finally, let's look at an extremely optimistic scenario. In this case, Google achieves close to 20% annual revenue growth and continually increases profit margins due to cost reductions. They repurchase their shares heavily, and in 2030, they still trade at a PE ratio of 28. In this case, we might even get a stock price of nearly 800. Of course, in the most pessimistic scenario, if something or someone unforeseen disrupts Google's position, the stock price could be $0 in 2030. You can see that even small changes can make significant differences in the stock price over a 6-year period. That's why diversification is so crucial. Never put all your money into a single company, even if that company is Google. Now, what do I plan to do with my Google stocks? At the moment, my Google stock is 4.5% of my portfolio. While I sometimes try to seize market opportunities with varying degrees of success in the short term, most of my capital is used for long-term investments, and Google is one of these companies. At the moment, I don't think there are any serious signs that Google's long-term position is in jeopardy, but for me, this could be a good expansion opportunity. Google is one of the leading tech giants, and its market position is hard to shake. It's a real money-making machine. I have no plans to sell my Google stocks, and I hope the stock price will fall further. I initially bought at 123 per share and expanded my entire Google position by 5%. I plan to make additional purchases under One Net and Wealth, but gradualness is crucial. Always keep some liquid money available so you can use it in case of a potential further drop. If you liked the video, found it informative, and would like to help me on my journey toward 1,000 subscribers, please press the like button and subscribe. See you in the next episode.